All right, what is up, everybody? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We got a whole lot to discuss today, so let's get started. Naturally, as you know by now, the dollar has pushed all the way back up to its yearly opening range, and it has done so rather spectacularly off of massive NFP numbers that we got Friday. Today is Tuesday, so it is the beginning of the week, and typically where we look for either a weekly high or a weekly low to potentially be put in. So that arises a load of questions, the main one being, what exactly does this mean for Bitcoin? We're going to get into that today and a whole lot more. So thank you first and foremost for being here, as always, as I value each and every single one of your times. Let's go ahead and jump into this. Let me first say hello to Ray, Johan, Darnell, Brian, Mr. P, Photobox, Beardy, Michelle, and the rest of you who are going to surely come following in here in a minute. We're looking at a potential short, near-term short on Bitcoin. The only reason being is because the move that we've seen on the dollar was high in volatility and momentum, and we've literally not seen the S&P 500, the Dow Jones, or any of the indices or Bitcoin react to that. So there's two different ways we can look at this. We can look at this as potentially being the fake move or a fake rally in the dollar to bring in bears, or the S&P 500 and Bitcoin and the Dow and NASDAQ are all lagging the dollar, as we do have a speech today coming up at noonish with Powell. It is going to be more of a sit-down style interview more so than a speech. So if I'm correct in saying it this way, I don't believe the interviewer is going to throw him any hardballs or anything like that. I'm pretty sure that his stance is going to remain the same, right? Even though he was less focused on recession and stuff like that in last week's FO or non-farm payrolls, FOMC meeting with the non-farm payroll numbers. I mean, it looks good. The outlook is good for the economy. The news is very bullish for the dollar, but everybody seems to think that this is definitely going to mean recession now. Basically, because then they were like, analysts are expecting, since inflation's coming down, since they're slowing the rate at which they hike rates, that there could potentially be a pause around the corner, meaning maybe one of these meetings they don't hike and they just stop and kind of see what the market does from there. That would be very bullish for risk markets. But if the jobs numbers and everything is still so strong, then that's going to give the FOMC what they need in order to proceed on this hawkish path. So whereas many investors were looking for a rate pause, rate hike pauses, or even potential cuts coming in 2024 or Q4 2023, now it's starting to look more and more like there probably won't be any rate cuts at all until at least 2024, which is basically in line with what Powell has said. So to me, I'm not going to be streaming it first and foremost. I don't know where it will be. It'll probably be across most news channels, or I'm sure you guys will have a link or be able to find it somewhere. But yeah, we probably won't stream that because I just don't think it's going to be that market moving, to be honest with you. It absolutely could, though. You know what I mean? If he backsteps anything he says and gets a more hawkish stance, then yeah, that will cause risk to markets to start tumbling and the dollar to potentially continue its climb. So let's go look at the dollar right now as we still have 20 minutes until the market opens. What we're potentially watching right now on Bitcoin for near-term entries for a day trade only. My main bias on Bitcoin for long-term 2023 is sideways to up with a bullish bias, which my bias is more bullish than neutral, but with an all-out bullish bias for 2024. That is if inflation is closer to the 2% targeted goal that Powell has. But for today's session, the way that everything is currently structured, we are potentially looking for short entries on Bitcoin. Basically, what we're watching is intraday resistance. We have already closed an hourly above intraday resistance on Bitcoin, so that typically would negate the trade. Right here is your intraday resistance. I don't know why the line is all the way over there. Well, let's just get rid of that. Right there is the intraday resistance that I'm speaking of. This is today's price range. So here is your opening candle for today's range on Bitcoin. You can see that it made a slight low last night after testing daily support, but this daily support test is recorded on yesterday's candle, not today's. So basically, this is going to be today's low, and this is going to be today's high. So what we're looking for is either intraday resistance to hold, or at the open, we will be looking for a run up to roughly in here, maybe take out any early intraday short positions, and then see the expansion lower. However, if the dollar flips here and starts to come off really hard, that will put a bullish bias under Bitcoin, or a bullish support under Bitcoin, and you could see Bitcoin take off. The current target profit, if able to gain entry above $23,000, would be 22,872. So it's just merely roughly around a $200 move, but that is more than enough to generate a decent sized profit. Excuse me. There are already a couple people that have taken the entry, because in the Discord we've already been discussing this. We've been talking about it since 7 o'clock this morning. So here is the dollar index. We're going to take a look at this. This is a big, big move, man. 3 days, boom, you're back into your daily open. Now, it doesn't matter to me if you use this dash here, which is just a tick, or if you use this candle. All right, it does not matter. Either one you use as the yearly open is still been tested. If you use the actual candle where you had trading take place, then you can see yesterday you did not close above it. Today you are currently trading above it, and you have already taken out yesterday's high, and you have indeed just now made a fresh daily high. What we can infer from that is bullish continuation. So typically, if you're looking for a reversal on a daily candle, you do not want to see multiple liquidations above the daily high. If you see multiple liquidations or multiple wick runs above the highs, then that typically means that there is still buying pressure under it. And you're probably going to see that trending environment continue. Today is trending to the upside. It is a small candle, but nevertheless, if you're making higher highs and higher lows intraday even, then typically you don't want to try to fade that move. And you can see that you have taken out today's high, and you did that not too long ago. But after taking out today's high, you did get a bearish reaction, which is why it's very important for us to wait until the open occurs. Because we know when the open happens, we're going to get that last surge in volume. And that last surge in volume will likely be what direction the market wants to take. Okay? So, what do I feel? What is my opinion about this? I don't really have one. I kind of felt as if though a retest was coming. You can see the exhaustion of sellers happening down here. Professional sellers do not sell into support. We do not sell the lows. We wait for corrections in a trending market. As of right now, this asset is clearly trending lower. It has been trending lower since all of Q4 2024. Now the problem with 2022. The problem with 2022 is the main trend is up. All you have to do is go look at a 12-month chart, and you can see 2022 is clearly a massive bullish range with a close around the midpoint on that range. So this is not a bearish candle. This is a bullish candle. And if you're going to be looking for continuation, then you would expect some support to be found somewhere. And there is an old yearly resistance right there. So if we get rid of the fib, get rid of that, just put this line back on there, come into here, you can see that that's essentially where you've seen all of this chop playing around that yearly old resistance. So a lot of orders being taken there. You had this move lower and then straight up. So this could be the month of February's low. Absolutely. An expansion away from that area with rapid volatility could suggest that you will be looking at an up month. However, these are often areas where traders will participate looking for a yearly trend to continue. Up until yesterday, your yearly trend was down. It's the very beginning of the year, and there is still a ton of uncertainty out there. And the investors, or the street as they're commonly known, Wall Street as a whole, has never been split. In fact, in my lifetime, we have never seen financial conditions the way they are right now, with a high inflation rate and strong job data and everything like that. So we are in unsailed waters, if you will. No one has ever seen anything like this, unless they've been doing it for over 100 years, which we know there's not many people that are alive that have been doing this for 100 years. So nobody has ever seen a climate like this in the financial landscape. So nobody knows what to do. Basically, there's still a lot of capital on the sidelines waiting for a clear, definite signal one way or the other. That way they can allocate those funds to the correct direction. That is all we are waiting for. My best bet would be, I'm a price action analyst first and foremost. That's my forte. That's what I specialize in. I'm going to treat this the exact same way that I treated Bitcoin's short trade in March of 2022. I'm going to watch price action around 103,663. If we start to get aggressive bullish momentum away from this price point, then I am going to have to trade the chart that is in front of me, and the chart in front of me will be screaming that you have potentially set the 2023's low, and you will be looking for bullish dollar continuation plays. Now, the other side of the trade, the side of the trade that I am currently on, which is dollar short, long Bitcoin, long equities, would be if the dollar stalls here for multiple days. I mean, you can get a range built. You can get a range built as high as this. It does not matter to me, right? If you stall out in a range up here and show the fact that there is no demand for the dollar above 103,663, I will be gearing up for US dollar short positions. I will be looking to accumulate those short positions and be getting myself prepared for that drop to take place on the dollar. As by this move being so very aggressive, you can see that you've completely reset the oversold oscillator, which is what it is needed in order for new short trades to be entered. People can't short at the lows. You are no longer at the lows. So we got to give this time. It's not going to take place in one single day. You're not going to get a 5-minute candle touch of this price and see a massive rejection. That is not how price action works. All right, let's just go back over to Bitcoin briefly, as the market has not opened yet. And let's look at this, because I think people get lost in the minutia of things. I think people get confused and they don't quite understand just how trading and price action even works. Okay, so this is 2022's opening price. It was very important back then when it occurred, and it was very important back then when we got back to it. Same scenario here as you got going on the dollar, but it took much more time for Bitcoin to actually get up there and test the price. Well, that's not what I want you to focus on. What I want you to focus on is how much time it took for Bitcoin to trade at this price before ultimately getting the directional signal. Here is the first time that you tested it with a daily close above it. Then you chopped around. But notice the momentum that you got once you got there. Now, there is a difference as far as on the indicator goes. You can see that you were overbought on Bitcoin here. But if the dollar continues to trade up, you will hit overbought levels as well, which will be good for downside plays. But you can see how Bitcoin essentially traded sideways, creating a range, if you will, around that price. So there is your box. There is your range. This day here, when you dropped away, was basically telling us at Trade Talk that we were now on the right side of the trade by selling into this push higher. So that is what we're going to be watching on the dollar. And look how many days. If you count this day all the way to the day that all the way to until where it broke down, you're going to see that it took 9 days. That is over a week. In dollar trading terms, that would be 2 weeks, because the dollar trades Sunday to Monday, or Sunday to Friday, right? So really Monday to Friday. So 9 days, you get 10 days in a week on the dollar. 9 days of Bitcoin trading would be 2 weeks on dollar trading. So that's what I'm saying. You could be at or around the yearly open on the DXY for 2 solid weeks before getting a definitive move. So please, please take your time. Be smart. Do not rush into anything thinking that you are missing anything, because you are not. First and foremost, you are subscribed to this channel, so that's good, because you're going to know what I'm thinking when I'm thinking it. And so far, since the channel has been open and public, we have nailed every major, massive market turn that has happened. And this one will be no different. We will get it as well. Now, that is, of course, could someone please fetch my brain? That is, of course, if and only if 2023 is going to be a trending year. See, we still have to worry about something, and that is sticky inflation. Stickier inflation is the biggest risk for this year, and sticky inflation would definitely cause markets to trade choppy AF. And choppy trading markets are difficult markets to trade. But if that occurs, we have a strategy for that. We will sell the outside of the range, and we will buy the outside of the range. Meaning, if it's going to be a range-bound year, we're going to be looking for entries at the top edge of the range. The biggest part about trading is identifying the market conditions that you're in. Currently, we are in trending market conditions, but we will see if that stops. All right? No matter what happens, we're going to do fine in Q1, Q2, Q3, and Q4 of this year. So we have time here, and then again, it could fall under here today and then rotate away and never go back, right? No one knows what's going to happen. So this is your stance. Above this, you're sitting on your hands, or you're neutral. Below it, you're bullish risk. You're looking for bullish entries on Bitcoin, waiting for daily supports to be tested. Above it, you're looking for sell entries. All right. So we are currently trading above it today on the dollar. So today on Bitcoin, we are looking for that short trade. But overall, my bias still remains to the top side. Last Saturday, I put out a video explaining that my bias on Bitcoin has been bullish since June of 2022. And that bias remains the same. I am not bearish on Bitcoin, even up here. I am expecting a pullback, but I will be looking to buy that pullback as long as the dollar is not making higher highs and higher lows. We do not trade against what the market is saying. We take trades, or try to, in the direction of the trend, regardless about what people are saying and how people feel. Trading isn't about feeling, it's about executing a plan. It's about taking entries at high probable areas. You can see currently where Bitcoin is on the daily range. There is no high probable area here for us to take a trade. The only thing you have is last week's close right there. We don't want it red either. We want it white because it's just a standard line. But on the daily, you have yesterday's close. This is yesterday's close, last week's close, same price. That's the only level that we got on the daily of any relevance other than today's high. And that's it. We have daily support here. And you can see yesterday, you traded right down to it and got a bounce. So if you were long Bitcoin and expecting a dollar rejection at the yearly opening range, this would have been where you were looking for your bullish entries. Unfortunately, I missed that entry. Okay. So right now I am looking for shorts, or I am currently looking to see what happens here at the open. We are going through the open right now. All right, so what was possible, or what I was assuming, is that we could get a run above today's high and then we could look to short that. We did not do that, so we will look to short into old daily res, as you've already made this candle a trap. You can see how this hourly candle, you've already pushed up into it. So short entry 23,009, spot 94. Johan has already taken that entry, and he has already taken 50% of that position off on this move lower, which was a very good idea, whether he knew it or not. This white line is the weekly open. You see how that works? So this down here is where I would have a profit target. But this is a very important, and Bitcoin needs to get under it, right? So if it is unable to trade under 22,936, then it's going to look like people are trying to accumulate the weekly open, looking for bullish weekly continuation. But I don't think that's going to play out, simply because, like I said many times already, you are trading above the yearly open on the dollar, and that matters. So we'll see if it plays out today. Nothing is ever guaranteed. Even if the dollar rips today, everybody's face off today, that does not mean that Bitcoin will go down. They are not 100% inversely correlated. They do trade on their own merits, given their own supply and demand. So I have seen the dollar trade up and Bitcoin trade up on the same days, and I have seen them both be bearish on the same day, and I have seen them close that way as well. So they're not inversely correlated. It's just typical. It's just typically what you do see when Bitcoin is trading as a risk on asset. So this would be high of day. This would be the secondary entry spot. My primary interest spot is here. Primary profit taking zone 22,872. So what I want to see is I want to see Bitcoin trade to here and roll over and come to here. That is what I want to see happen in order for my thesis to be correct. Like that. Obviously, if you make a fresh daily high, then that will give other people an opportunity to potentially take the short up there, would make their risk to reward a little bit better and cleaner, as all they would be looking for would be support here to take profits. So from up here to here would be an easier trade to take if you were to get a rejection after taking out the high of day. Nobody knows what's going to happen. I have to keep saying that because some people think that I have the answers. And when you ask me, can I take this trade? Can I take that trade? I'm not going to respond to you because I am not a financial advisor. And when you ask me that question, you are literally asking me to advise you on your financials. You have to be the decision maker in this process. I will tell you what levels I'm looking at. I will tell you if I make or lose money on a position. What I will never tell you to do is take a trade. What I will always tell you to do is manage your risk if you do take a trade. I just had a ham and bacon quiche that I made yesterday. It was pretty good. I would much rather it have set better and been a little stiffer than it was. But a quiche is a custard, and custards are soft, I guess. Yeah. Yeah, so that's what we're looking for. Let's see if we can redeem ourselves, as last week we did not do very good. So 20 people just dropped off for no reason at all. I don't know why. Right now is the time to look for those damn entries. Or when you were playing around this level. If you're coming here for entries, that's what you're doing. It still is a little bit choppy, and I would like to see it roll over. You can see Risk has already done it, right? Risk has already made the move. So I do expect Bitcoin to make the move. I do expect today's trade to be profitable. You should never expect anything, so let me walk that statement back. Risk is making a move to the downside, so the probabilities are on the side that Bitcoin rolls over. As long as the dollar is trading at the high of day, which it currently is, that's good for short Bitcoin positions for today. This is a day trade only. We are not looking to get much continuation out of this. We are currently trading at the weekly open. Like I said, we want to see this level get busted. We want to see it break down. Otherwise, the short trade could be invalidated. And then also, by taking out yesterday's low on the S&P 500, that could invalidate our trade as well if you get a bullish reaction after that. You currently do have fresh daily lows on the S&P 500. 1800 hours is the open of the day. So you can see this wick right there was your low of day. So this right now at the open, you have taken out and made a fresh daily low. Weekly open is a big level. It is a strong level. Tough to get through. You are trading well under the S&P 500's weekly open. Yesterday's low on the S&P 500 here. So really and truly, that's kind of our trading range right there on the S&P 500. And it looks droopy to me. Right? Looks droopy. There's your daily open. As I said, you were above it for a majority of the day. And it ultimately last hour broke down with a legit breakdown. And this hour, you're getting that downside continuation. You have taken out today's low. So Bitcoin is running back up to 2309. 2300 is intraday resistance on Bitget's platform. 2309 is intraday resistance on Coinbase's data feed. The US 30 has made a fresh low of day and is rejecting. The US 30 is the Dow Jones Industrial. The reason why we have the Dow Jones Industrial up on the chart right now is because it is structured bullish. You have all the major moving averages setting right where they should be if the market was bullish. So there's that tick. You also have the 21 exponential moving average setting under here. And we do know that retail traders and algorithms and bots, the yellow moving average here, that's your 21 exponential moving average, will take entries based off of that. You also have daily support, multiple daily supports here. Bitcoin now testing resistance. So this is kind of what we're looking at, right? A lot of potential support here for the Dow Jones. Buyers will be looking to potentially buy that. You are also at the 50 on the RSI. As long as you're above the 50, that means the buyers are in control of the market. So there still could be a ton of demand inside of the Dow Jones. And since you haven't been screaming to the upside, this is a pullback. And if this market's structured bullish, your BTFDers or buy the effing dippers will be in this market. And they will be looking to take bullish entries. And they will be looking for bullish expansion, which would be in line with a rejection eventually with the US dollar getting back under its yearly opening range and then pushing further away from it. Because the US 30 has already potentially made its bear market lows. Now, as long as the street keep discussing inflation and the words recession, then the markets are going to have a hard time maintaining that bullish bias and that bullish pressure that we've seen it hold pretty strongly all of for the whole month of January. Dollar pushing higher back up into the high of day. Bitcoin still trading under our entry level. Wait, I'm 120 years old. I have seen all of this. We are going to the moon. Well, that's awesome. I'm glad you've seen it all. I have never seen it either. So basically, we're just trading off of technicals here because there's not a lot of news today outside of Powell's sit down with whomever. So, like I said, people could be buying this, and if they do buy this, then Bitcoin may go higher. Bitcoin's buying opportunity occurred last night at the open here. The reason I didn't get the entry is because I was watching the push lower. I wanted to see a test of the level and a potential wick lower than this wick, as then I would have bought it. And I would not be looking for short trades today. I would just be holding the long position. But I cannot and will not get long here. If you want to get long based on the weekly opening here, then you would have to use the weekly low as your support or as your stop loss. And as you can see here on this, that's a pretty big range. So your trade setup would look something like this. Right? If you are expecting weekly range expansion, that's what your setup would look like. You're not going to catch the weekly low because if you do get bullish range expansion for the rest of the week, your weekly low is in. And I believe the same is true for the high. If you're going to get weekly range expansion to the downside, which last week you took out the previous week's high, and then your range expansion occurred to the downside. So as of right now on Bitcoin, if you just look at last week's range, you are currently structured to make that move lower, to push down and attempt to take out those lows right there, because you were unsuccessful in doing so last week. And there is no point for Bitcoin to trade higher for topside liquidations because those occurred last week. A breakdown here on the Dow could be a big one. If it does ultimately break down, it could be a pretty big expansion lower because of the BTFDers. Right? They will be getting stopped out if this thing does indeed break below, back under the 21 exponential. Coming back over to the dollar, if you look at your moving averages, you're going to see that you did get back above your 21 exponential with spectacular fashion right here. So on the near term, the dollar does have a very strong bullish bias. So let's wait for the dollar to get overbought. And let's hope it's not trading far away from the yearly open when that occurs. Because when that occurs, we could be looking for those supports that we want to look for and buy Bitcoin for the longer term quarterly range expansion. Not so much a day trade. I like to take day trades, but I much rather like to position myself for the position trade, as I've done on the USD, right? And as I've done on Bitcoin. I've already positioned myself for position trades, and those trades are still open, and they will remain open as long as they are making money. The dollar being above the high of day can potentially push all the way to 104.071 today, right? So, I mean, everything is structured for Bitcoin to make a lower push, except for this one asset, the Dow. It's in multiple supports. And that's kind of sort of what I think is holding the market up right now. Bitcoin. Right? So let's just give it time to work itself out. We can pull Bitcoin up here on the big chart. Let's see if we see any of that sell side volume coming in. We do. All right. So the volume profile has structured itself to the upside of the daily range. This is indicative of selling pressure. This does not mean that Bitcoin is definitely going to roll over and that the short trade is going to work, because these could be buyers. They could be buying the high of day. We see that happen a lot inside of the crypto markets. So we don't know if it's supply or demand, but given everything else that's going on with the smart money, you would assume that this is profit taking, aka selling. And we have an hourly close coming up pretty soon. The hourly has also shifted. The point of control on Bitcoin was down here. Now it's up here. Your point of control for yesterday, the most shares traded or the most volume traded, right through there yesterday. Pretty much in line with current resistance. We're using this as current resistance because this candle, even though it broke out and closed above resistance here, your low was taken out there. A much stronger signal would be if you closed under that. I would like the entry here for the short much better, but we just have to give it time and let it play out. A spike above the high of day would also be a potential short entry, as long as you get an instant rejection. Those are the only two places I like for shorts today. 23009 or 23062. Considering this is a 6 or 5-digit number, $50 is not a lot. It's not a lot of room. Right? It's not a big move. You're currently trading as an inside day. So just by looking at daily structure on the market, here's a breakdown from support. And yesterday, you had a retest of the midpoint and you made a fresh low. So order flow is currently bearish, or at least you're making lower lows. You have not taken out yesterday's high. So it looks like the target today will be a lower low. Look at when the dollar bottomed in 2021. It went straight up after that. That's when the Bitcoin went to 69K. If you traded that same way, you've lost a lot. Okay, well, don't trade that way, KK. I don't know what I'm talking about. Everything works in trading, just not all the time, my friend. It's about probabilities. All right? Just because you flip the heads on this coin toss does not mean, even though it's a 50-50 chance that you're going to flip the heads again, that you will. It's about probabilities. Just because something didn't work once doesn't mean it won't work again. But I'm not exactly sure of what you're saying here. Let me see here. Look at when the dollar bottomed in 2021. All right, so while Bitcoin's doing its thing, let's go entertain this. I have Bitcoin pulled up on the other monitor. I don't know what you're saying. If you would have traded that way, I don't know if you mean the yearly open or what, but let's go find 2021's yearly open and see if he is right or they. All right, team. Fute Ledges in the chat. Explain how we would have lost money doing this the same way. As long as you're above the line, you're bullish. As long as you're below it, you're bearish. Given time, this is a daily time frame. The whole beginning of the stream, I preached to you about how when we're at the line, we give it time because it can take multiple days for it to suss out its direction. Upon this day here, Trade Talk would have mentioned that we have broken back out to the upside over the yearly opening range. So any pullback into that level would be looked at with buying opportunities. We have got that pullback just 4 days later, right there. And this would have been our entry. We would not have lost a lot of money. In fact, our stops would be pretty much 89.93, and we would have taken profits on the move higher. Therefore, we would have made money. Therefore, we would have moved our stops to break even, and we could not have ever lost money. Then on this next upward expansion, we would have cut in that position down by more, making more money. Then again, when we broke back down here, yes, that original bullish trade would have been wiped out. Then we would be waiting for the exact same thing to occur. But you didn't even close under it that day. So chances are, moving forward, we would have been looking for bullish entries right there. And lo and behold, on the very next day, we got the bullish entry that we were looking for, and boom, shakalaka, my friend. So not quite sure what you're talking about. Not quite sure what you are talking about. Many people have tried and tried to go against me. They are typically on the losing end if you look at it in a long duration format, right? Long duration format. We have a much higher hit rate than most. So you did get a push lower back down to the weekly open, and once again this thing is going to struggle there. That is the weekly open. The weekly open is the weekly open. It is set in stone already. It is not a subjective level. It is an objective level. Objective levels are harder to get through. This could very well just be a sideways inside day. We never know what's going to happen. And we made money on the Bitcoin move up to $69,000 anyways, so I'm not sure what you're talking about. Oh, I see what you're saying. Yeah, okay, I got you. Using the dollar as a metric of whether to be bearish or bullish. I got you. Yeah, we typically don't, right? We typically don't. It's just, like I said, you're in a different market regime right now. Capital did not rotate into the VIX during the bear market of 2022. Capital rotated into the dollar. So as your bear market unfolded in the S&P 500 and in Bitcoin, the dollar was going up. That is the only reason why we're still looking at dollar Bitcoin inverse correlations. I do honestly believe that that correlation will be broken soon, because the dollar is the world's reserve currency. But they didn't flow into other reserves. They didn't go to the Japanese yen. They didn't go to the Swiss franc. They didn't go to the VIX. Like, I've laid all of this out in previous videos, right? Not always does bullet, and then I said it at the very beginning of the stream. Just because the dollar's going up does not mean that Bitcoin has to go down. It just typically does because Bitcoin is traded against the dollar. BTC USD, right? And the DXY is the USD. So typically, if USD is stronger than Bitcoin, then Bitcoin is going to trade sideways to down. You can still get those days where Bitcoin is actually stronger than the dollar, but the dollar is stronger than all the other currencies in the world. Therefore, Bitcoin will trade up as the dollar trades up. We know what we're talking about here. Just sit back and enjoy the ride. You'll learn a few things. I promise. I promise. Don't just take 5 minutes of a stream and assume that that's the way I've traded my whole career. We made money on Bitcoin in 2021. Had we only been trading the dollar in 2021, we would have been making money on it too, because we have a rules-based strategy. And that rules-based strategy is taking high probable entries at objective price points. That's the strategy. We don't care about news. We don't care about the overall climate. we care about price and price alone. What is price telling us? On a day-to-day, week-to-week, month-to-month, quarter-to-quarter, year-to-year basis. I do not think Bitcoin's going to give back all of its gains this year, but it is possible. It hasn't given back all of its gains, and the dollar has. So all the losses that the dollar made in January has already been given back. Well, not all of January, but while you were under the yearly opening range. So all of that downside, that translated to massive upside on Bitcoin. Massive upside. So if you look where Bitcoin is trading currently from its yearly opening range versus where the dollar traded to from its yearly opening range, you can clearly see that there is not much of a correlation between the dollar and Bitcoin. There is Jan 1. That is your yearly open right there. Yearly opening ranges on my charts will be marked in yellow. So here is your yearly opening range on a DXY. There is your yearly opening range on Bitcoin. Just a little subtle difference there, right? Just a little bit. Yeah, we know. We know what we're doing. Even though we know what we're doing, we still take losses. You're going to. That's trading. You're going to eat losses occasionally. Not everything works in trading all the time. It works, but not all the time. I would like to see it start to break down pretty soon. Because the more it does this, the more it looks like people are buying the weekly open. An hourly close back above 23,009 would have you just close the position out, right? Because if it's going to be a choppy sideways day, which it already is, because you're trading inside of yesterday's high and you're trading inside of yesterday's low, hence inside day, that is a choppy range bound day. You're not trending. You're doing the opposite of trending. We don't want to be in the market anyway because we're trend traders typically. If it is not trending, we can't make money. I'm up currently on the position, so I could technically close the position right now and be profitable on today's trade. Right now, I am up better than one. It's closer to a 2-to-1 risk to reward from where I got my entry to where it is trading right now. It's just not that much of a return. An expansion down to here would make a fantastic return, whereas closing it up here, minus the fees and all that, it would be probably close to break even. We look at the bigger picture, but I'm a price action trader. I promise you, you're going to learn some things if you stick around. Do I put any value in looking at order books for Confluence? No, I do not. Order books can be spoofed, and especially in crypto, because crypto doesn't have laws to prevent order book spoofing. So, like in the United States of America, you are not allowed to spoof the order book. And if the SEC catches you spoofing the order book, which simply means putting limit orders at lower prices, big limit orders at lower prices, trying to draw liquidity lower, that's spoofing the market, then you're going to get in trouble. In fact, a guy went down for it not too long ago for doing that, spoofing the order book. The reason I don't look at level 2 data is because level 2 data is controlled by bots and algorithms. Secondly, the reason why you will not get an edge looking at level 2 data is because liquidity providers are buying from one exchange and selling to the other. So just because you see a big sell order come in, if that order, even if that order's filled, it does not necessarily mean that it's going to go lower, simply because there's a buy for every sell and a sell for every buy. So as soon as that sell comes in, that big sell order, buyers are already chewing through those orders. I think if you're looking at level 2 data, or the order book as he called it, you're doing yourself a disservice. This is a personal opinion. There are old school traders out there that watch what's so-called, and you can't see me because I don't have a camera, but I'm using both hands and both fingers to quote unquote the tape, right? Because watching order books and level 2 data and the trade list, where you see the actual filled orders go by, and some of them are red and some of them are green. That's the tape. You can get an edge. You can't anymore. Secondly, the order book is limit orders. It does not take into account market orders. So you can see where people are putting limit orders, but you cannot see where people are putting market orders. And market orders come first. Limit orders are secondary. Market orders come first. Market orders are filled upon entry. If you hit market buy, you will be filled instantly, and you will be filled at the exchange's bid or ask, right? There is no edge looking at that data. I have clear and obvious edge by only looking at candlesticks. I really don't even care too much about volume. Volume by time, especially the volume bars on the bottom of the screen. That's volume by time. When you see order bars at the left of the screen, that's volume by price. To me, you have a better edge of knowing where volume by price took place, simply because you know at which price most of the volume traded for that day. It doesn't give you an edge whether it's buy side or sell side volume, even if they tell you that it was filled orders of sell side volume. That still does not mean that price is going to go lower. Price is in search of liquidity. That is what price is doing. It is searching for liquidity. It is not moving because someone sold here It is moving because there's too much supply there, and it's looking for demand down here. When it finds demand, it will then retrace and go back to where supply was. And as long as there's a balance there, then price will trade sideways from supply to demand, from supply to demand. And that is how operating ranges are built. Once supply exceeds demand or demand exceeds supply, then you will have a repricing out of the area. So once the supply side has been tapped out here, or in this case, demand has been tapped out here, you will see, and there's still a ton of supply up here, you will see a repricing lower in search for the demand. And that repricing can go low, right, until it finds sufficient amount of demand in order to basically get it back up to supply. But typically supply works in lower. As price is moving on incoming data right now, it's not moving on what happened 6 months ago. It's not moving on any other thing. Price is moving on the data, on the orders that are coming in now. The data that's coming in right now, right this second. That is what is making orders move or price move. Price isn't fluctuating based off of a Fibonacci devaluation zone of 2027. Price isn't moving because of that. Price is moving based on orders coming in now. This is why you get sideways choppy price action. It's once you get a massive imbalance in something, right? Supply is simply sell side. A lot of selling. Doesn't matter if it's shorts, doesn't matter if it's profit taking, or just simply exiting positions. You get a rush of that supply. Price reprices down to the next area of demand. Once you exhaust that supply and you have a greater imbalance of demand, you get another repricing back up to where supply is or was. That's how I look at it. Is that how it works? I don't know, because I'm pretty sure you're not going to find the exact answer on that question. Because if someone truly knew exactly how the market worked, what made the candles move, then you would know exactly where to place orders now, wouldn't you? That would give you the biggest edge of the market in the world. So take what I say with a grain of salt when it comes to why price moves and where it's going, even, because I don't know. It's just from experience that I'm able to nail these ranges pretty damn good, right? Because of experience, I know what's going on or what I think is going on. Like, you're struggling here because of one reason and one reason alone. This is the weekly open. That's it. There's no other reason why price is struggling here. It's simple. People are making decisions. They are placing orders here. And the reason they are placing orders here, whether it's buy orders or sell orders, it doesn't matter. The matter is no matter at all. The reason price is stalling there is because it's the weekly open. I learned this, and once I learned that, then my world changed. I still don't know why the market moves or what makes it move. If it's an algorithm and it's only an algorithm that makes price move, and you know how that algorithm works, you know the code for that algorithm, you will never lose another trade in your life. Therefore, you will be the richest man in the world in the span of a year's time. Nobody knows. Nobody. The liquidity providers, they're not moving price either. Like a lot of strategies are built around market makers, right? Market makers running stops. It's not market makers that's doing that. It's price that's doing that, not the market makers. Market makers don't care. They're not making money on directional bets. That's a casino. They're making money off of mathematics and spreads. We will provide liquidity to your exchange for this fee, right? That's how market makers make money. That's how they provide liquidity. That's the reason why you are able to buy pretty much at any price and sell at any price, because there's already a market maker or a liquidity provider on the bid or ask already sitting there. If there wasn't a market maker sitting there on the bid and ask with shares to the opposite side of your trade would not go through at that price. The weekly open didn't matter there or there, but it is mattering today. We did get a pretty big bump in volume up here. So one could assume, looking at the S&P 500, because you did make a fresh daily low right here on the same hour as the hour we're on right now on Bitcoin. Bitcoin just isn't moving. And you get that sometimes, right? Powell is supposed to speak today, so maybe that market participants are waiting for that. But you've already made another fresh daily high on the dollar. So on all accounts, this thing should have already pushed down our profit target. Another thing that could slow it down, given a technical reason, right? Because that's what we do. We're analysts, price analysts, technical analysts, is you have demand right there. And we know it's demand because price closed lower at support and then traded away. So we know this area has demand. We know it does. So even though this candle prints as a bearish candle, a loss on the hour, we know that more buying happened inside of this hour than selling did because of how price left the area, right? So even though that we're struggling to get under the weekly open in this area, it's simple. You have a spike in volume here and here. This was where the point of control was earlier this morning. This is also your London session. So the London session came in and then price repriced away. So we know demand stepped up here. Now, all we're waiting on is for the market to test for supply. If there is insufficient supply here to meet with demand here, then you're going to get a repricing higher and probably set a new operating range as demand and supply fights its way out again or battles its way out again. Just look at this nonsense. And then you just have random market violence also when you trade away from an area like that. Demand, boom, up. 8 hours later, you're right back down and much lower, right? That's because things change minute by minute, second by second. Things change. The market does not care what happened yesterday or the day before or the day before that. What only matters is what's happening right now. We can look at technical indicators and stuff like that to kind of help us get an idea or a bias for a directional bias, but ultimately they really don't matter. They really don't matter. What matters is price. What does it do? What does price think? What is the market pricing in? As the market was pricing in a very dovish Fed here. Then we get those non-farm payroll numbers and what should have been a blowout day for this. Right? It wasn't. It was a muted day. It was muted. Didn't hardly move. We had a bigger move on Sunday than we did on NFP day. That doesn't make any sense to me at all. It just tells me that the market participants are confused. They don't know what to do. Weekly open still holding up. Price still struggling to get below that weekly open. And once again, if you're just joining us, we are currently in a short position. This is our entry. And this is our profit target. Here is our profit target. And you can see that it is a 2.78. So it's 2 to 1. We are risking 4% to make 2%. I'm actually risking 20% to make 40% because I am levered up. And if price gets there, then my limit order to take profits will be filled. Then I will instantly move my stop loss to break even. This way, the only thing that I am currently risking now will be unrealized P&L. That's just that hourly demand. This weekly open here is the one that I'm concerned of. Because you can see, man, there's big volume there. That's this whole price range. So that's another reason why that's where I want to exit my position. It still hasn't moved that aggressively on Bitget, and I don't understand what's going on. All right, so taking profits now, closing out 70% of the position. Moving stop to break even. And just like that, we're up on the week. See, I told you, don't worry about last week because next week will bring new opportunities. There it was. There's one of them. We're going to have, as long as price stays trading under the entry of hourly resistance, this price up here, this objective price, if it doesn't go back up there, then the amount of position and leverage on that position size that I still hold, if we get downside continuation today, that will end up paying me more than the original trade did itself, and I will not be able to lose any money at all because I've already made money. The P&L is already up on the day. I can lose this unrealized profit that I'm still holding, but I will not lose my money, the money of the original risk that was taken. That money's gone. It's out of the marketplace. One and done. And just so that way, I can show you. Here is today's discussion inside of the Discord. Still separating data and getting the stuff I need. It takes time. As of right now, for a day trade, this is what Bitcoin looked like at the time of this post, which was at 7:40 a.m. We should be looking to sell Bitcoin. So my bias on today's trade was already situated then. I did put in a caveat, a safety caveat of we are not at any daily levels, so it's not a higher probable trade. Who watch today's intraday res and hourly closes around it. It could chop around until the open, so be careful. Once again, no daily levels here. Naturally, it closed above. It did on that candle. But then the very next candle made that a trap. Wait until the open. Here is the open. Right there is your open. This white line is the line in question. You had 1, 2 opportunities to trigger an entry there at the exact price that I said to watch. The exact price that I said to watch, not around it, exact price. And our profit target was another exact price. Look how price barely tagged it and is now reversing. So if you think that I don't have an edge, that should clarify it for you. Does it always work? No. We lost 2 trades last week live. But both of those trades were taken during very, very, very volatile times. One being FOMC, the other one being non-farm payrolls. When you have normal trading days, that's when the edge works the best. Because you don't have a herd mentality. You don't have FOMO going on. You don't have people chasing price left and right. Right? That's why we like to, do stuff like this. Now, this still matters not, because I could still be on the wrong side of the trade. Because the weekly range is still being formulated. It's still being worked out. This is still the weekly open, and it's going to be the weekly open for the rest of the forever. This price will never change, ever. This will always be the weekly open for this week. Okay? So while this is still here and price is still trading around it, I have no significant directional edge. Not yet. Not yet. But we do have a significant edge when it comes to day trades. The long-term edge is even better, because I currently am sitting in long Bitcoin positions from 16,530, and short dollar positions on USDJPY on almost the very top tick. Those positions are still open, and they will stay open, because I have seen nothing to tell me to change that. Let's get the Dow back over here. I'm curious to see what's going on there. Yeah, like I said, the BTFDers, man. This could be getting bought. And if you are trading the Dow, you could absolutely be buying this. Will it work out as a long trade? I don't know that. But it is at daily support. The 21 moving average is there. The Dow could simply be making the weekly low right now. And it's an old level, but there is an objective price level there, being the week of January the 9th. Its opening price. I don't like old levels like that, though. I like fresh ones. Fresh ones work better. If you had waited and sold weekly res, that one worked better. That one worked on the first tag. Right? First tag of it. Boom. There it was. There is an edge there, man. Just fade that until you make 2-to-1 and jump out. Boom. Get your risk off the table. Move your stop to break even. That way, if you get upside continuation, you're done. You made money on the trade. Now you're waiting for the next time your edge comes into play. It's about small, consistent returns over time. That's how you build a portfolio. That's how you make money in trading. And literally, hardly any indicators used. I don't take positions based off of inverse cup and handles or inverse head and shoulders or this or that pattern, or these ABCXDY, ABCDs and ciphers and bat patterns and all that stuff. It's just confusing mumbo jumbo, and every bit of this, every single bit of it, is subjective. And people have made millions, probably billions of dollars selling courses, teaching people how to trade subjective patterns. When objective levels is and has been and always will be the way to go. If you want true edge in the markets. This is going to be 2023's open for the rest of the dollar's life. It'll never change. That's the opening price. That will always be the opening price for 2023. It is set in stone, baby. And we are going to be watching the dollar here for many days, potentially, until we get a clear and definitive move, either to the upside to show us that there is demand above the yearly open, or to the downside. And also, not for crypto, But for Forex, this will definitely be important for, say, long short trades on Euro USD and FX is where I make my bread and butter. Stocks and options, where I make my bread and butter, trading the exact same strategy. What I'm doing on Bitcoin is accumulating more Bitcoin by trading Bitcoin to make more Bitcoin. So my downside is capped. Bitcoin is a very volatile asset and almost impossible to manage risk trading it. Whereas I can only risk 1% on this every single time I take an entry. Every single time. 1% risk, 1% risk, 1% risk. Easy to manage risk trading this. That's why there are trillions of dollars being traded inside. This is the most liquid currency pair in existence. Trillions of dollars are traded in this pair every single day. And just by looking at this chart, you can see that there is a clear edge. Right? Clear. These are hourly candles, and look how they react. Now, I don't know if this is going to hold support or not, but what I do know is, as of right now, as of February the 7th, 2023, the primary trend is up. Still up. Because you are still trading above that level. You get below it and then you're bearish on the year. So then we have to wait and see, do we get a bearish reaction away? We currently have on EuroCAD this is also going to be like a monthly resistance or something. No, weekly. Weekly resistance right there. Boom, boom, boom. Reject, reject, reject. Drop down to the daily. Yearly open. You trade down. Back to it. Reject. Above it. Bounce off of it. Back below it. Back above it. Back under it. So if it starts to trend away from it, we're going to be looking to sell any resistances above. Because currently, on the year, on the month, and on the quarter, you're what? Yep, you're right. You're bearish. But at a crucial support zone right now. It's not so crucial on the quarterly, but it is definitely crucial on the yearly. That's where you're trading today. Like, yeah. There's edge here. Long-term edge, short-term edge. Edge is all you need. All right, so let me go answer some of these questions. Here late, I always miss the announcement that your stream has started, so playing 2x to catch up. I talk so slow, you'll probably get more out of it if you play it in 2x. Do you put any value in looking at order books, Confluence? I know a lot of spot spoofing occurs. No, I do not. I do not use them, do not put any edge on them. I did at the beginning of my trading career, but I realized real quick that there was no edge that I could gain by watching order books and level 2 data. I have paid big money for software to show me where orders go. Bookmap, I used to own them. I've owned several other news companies where I get the news on the dot when it happens, like Benzinga Pro. I used to own scanners and all this other stuff. I don't need any of it anymore. I've sharpened and honed my edge to the point to where literally the only thing that I pay for is TradingView. What else? I pay for Glassnode for on-chain data, but I'm not a premier on-chain data guy. I'm still learning how to analyze that data, and I'm still deciding if that data has any relevance whatsoever to the price of Bitcoin. So, yeah, just kind of learning it. But other than that, you don't need any of that stuff, guys. That stuff is geared towards just making money from you. Indicators. I don't buy any indicators. I don't buy sell programs. I don't own any bots. Like right now, there's a bot thing going on Twitter where it's a freaking 99% hit rate Autobot, good guy, freaking transformer bot that makes your trades for you. It's all horse shit. Just let you know. It's all garbage. It's all garbage. It's designed for you to pay a monthly subscription fee. That is it. It's pretty and it's got nice bells and whistles, but it will provide you no better edge than you can find from this channel for free. Trying the Bitget demo for the first time with this trade. Nice. Michelle, make sure you use low leverage. The higher leverage you use, the more of a move you need in order to make money on the trade. As the fees get higher, the higher the leverage goes. And you will figure that out. Over time, you'll see what I'm talking about. Use small leverage for now until you really understand how the platform works. Bitcoin is having its first ever death cross on the weekly chart. That's interesting. Let's go see if it's happening. You got some time. I guess this is one of those subjective things that some people are going to say the death cross is by definition from the 50 and 200. Whether you use EMAs or SMAs, I guess it doesn't matter. So if a death cross is happening on Bitcoin, it must be on the SMAs. It is not happening on the EMAs. The green is the 50, the purple is the 200. You can clearly see you are not even close to touching one another yet. So let me pull up a 200 and a 50 simple. Well, I lied. That's a 55. Oh, you're right. It is happening. And that's going to be on the close, too. So if it closes like that, that will be relevant. I don't know if it amounts to any significance, but it will be relevant. Yeah. Nice catch. That to me matters not, but it matters to some traders. And you're almost about to get it on the simples as well. Good catch, Victor. Remember, that'll be per the close. It's got to close like, well, to be fair, if it closes under the open, it's already going to happen. It's already happened. It happened last week's close. Yeah, it's probably not great news. That's going to bring the Bears back. Well, good, because we're short from 23,009. So if it wants to roll over and give back all those gains, guess what? The amount of leverage that I still hold on the position size that I still hold short based on today's day trade, as long as it's trading below the open, that position will make money. It'll make USDT anyways. It won't make dollars. It'll make tethers. But yeah, nice call. Good morning, Heath. My setup for Bitcoin today is long at 22977. All right, long. Here, let me just Alt H. .68. With a stop at 22889. And a take profit at 23066. All right. So it's a 1-to-1 risk to reward. I took it at 8 o'clock. Thoughts? Well, it looks like you took it based on a 5-minute chart, because this middle one is your entry. So let's make it green. You've been stopped out already. And it looks like you were aiming at the high of day. You know what, Danny, I have no trouble with the trade other than you got long at the high of day. All right. So let's mark this red. That's not red. There. So it looks to me that you probably got long based on the 5-minute chart. And if I put it on the daily time frame, do you see how you tried to get long above yesterday's open, and yesterday clearly showed you that it was a bearish day? Okay, I'm not scalding you. This is a learning lesson. If I'm not mistaken, you are in the Discord, right? So you went wrong in many, many, many different ways, according to the way that I teach you guys price action. First and foremost is that you got long above yesterday's open. That's not really what we're looking to do. Secondly, you got long on today's upper edge of the day. Like, this range for today is already here, right? It's already here because you were aiming at the high of day. So you were trying to take an entry close to the high of day, aiming for the high of day, above yesterday's open. Yesterday closed down here. So if anything, since, remember, I tell you, look at the last 3 days of data. Don't worry about anything else. Just the last 3 days. Is it a potential market turn or not? Well, for this to be a potential market turn, you would at least wanted to see yesterday close green. Give you the at least added benefit that yesterday was a bullish day. So coming into today, just the fact that yesterday was bullish alone could potentially help your bias. But yesterday closed bearish. Yesterday closed bearish. So there's a second point against the trade that I wouldn't have taken based on those two things alone. That A, it's above yesterday's open. Why? Let's go into this. This is a fantastic teachable opportunity for everybody that is still here. Why is getting long above yesterday's open bad idea? Well, because yesterday's open is likely to act as what? Resistance moving forward. So you're trying to do a breakout trade in a sense. You're hoping that the trade's going to basically stay above yesterday's open. And if you just look back in time, you can see how this day here, notice how it traded up. Where did it trade up to? The previous day's open. That's where it found resistance. Next, this candle here. What happened on this day? Well, it closed bearish, but it did trade up above the previous day's open, but the previous day's open closed bearish also. So you traded up there, probably got a lot of people nice and bullish, but then reversed face and boom, down you went and closed bearish on the day. Next, let's go back another day, right? You get what I'm saying? Closed bearish on the day. You open under this candle's open. You trade up. Where to? Last candle's open. Almost. You didn't quite get up there because there's some black space in between there. But the more likelihood is what? Resistance. So when you got long above what could potentially end up being resistance, right? It doesn't mean it will, but it could end up being. So don't ever get long again, please, above a previous day's open if that previous day closed bearish. Please don't do that no more. Write this down. In fact, after the stream's over, I'll go back. I will bookmark this part of the video specifically for you and anybody else like you that took the same trade based on whatever it was that you seen in the chart that made you decide to go long here. Had you mentioned it to me in chat, I would have told you no freaking way would I take that trade. And it's based on that fact alone. That yesterday and the previous day both were bearish. So if the trend's going to continue just from the last 2 days, we're probably looking for bearish setups. Right? Currently, when we took the short, that's why I marked this level and said that's the only daily level right there that we had. We were trading up here. So now, this level, now that you're trading under it, that level is going to be very, very, very instrumental moving forward. Thirdly, this level is also what? I'm trying to help you when I say what, right? I'm like acting as if they were in a classroom and you're sitting right next to me and you can actually answer the question. You can't. I understand that. So maybe I should stop doing that. I'm not talking down to you at all. I'm literally trying to help you more with the strategy. Not only did you get long above yesterday's open, you got long above the weekly open. Okay? So this is the close on Sunday. And Sunday was the biggest range expansion we had since last Wednesday, since FOMC day. Here's NFP day, and its range expansion from low to high is smaller than Sunday's range expansion low to high. So something happened on Sunday. You had a repricing lower, and it was a sizable range lower. So that tells you that order flow on Sunday was bearish, and you had bearish continuation order flow on Monday. And you tried to get long above that price, above it. So there's that. Now let's go into the intraday charts. All right. So I see what you're looking at here, and I like it. So you are starting to identify operating ranges. That's good. It looks to me like you're taking the trade based off of intraday hourly support, which is good. That's a good move on your part. The problem is you were just on the wrong side of the trade. I like the buy here and the fact that you were on the upswing when you took it. But you were only looking at this data. You weren't looking at the bigger picture. The daily chart was showing you clear order flow was bearish and had been for the last 2 days, and you're trading under the weekly open. Now that the weekly open acted as resistance, which you've probably seen that, you've probably seen a pullback to support here, and then you've seen this expansion there. That is the trap. That's the trap that got you. That was set up and specifically designed to lure you into the trade. Not just you. Millions of other people took that exact same position. I like your stop loss. Get it well underneath all of these wicks. So if it does jack around in place, whack-a-mole with stop losses, you're in the clear. You're probably risking 1 to 2%. I like that. And you're only looking for 1 to 2%. I like that. You are looking for a high of day. That I don't like. You also know that if you are looking for entries and using the operating range, your profit target needs to be consistent with the operating range. So getting long here, you should have been not looking for anything above this, because that is resistance for today until you get a close above, until you break out. This is your operating range right there. Now, the operating range for the previous day, or the resistance even for the previous day, was a little higher. And then you had a resistance here even, which was a little higher. So having your profit target above the high of day means price had to get above this resistance, and that resistance. So you were expecting too much on the trade. You were expecting price to break out and move beyond and print a high of day, a new high of day. So, and this doesn't mean that if you do this in the future, you'll be wrong. You identified the operating range. I like that. You're learning. Stick with me, my friend. I promise you, your game will change. You said you took that at 8 o'clock. If you're in the Discord, you knew by 7:40. This is not me bragging. Please never take what I say as me bragging or boasting, because I don't know what price will ever do. But at 7:40 a.m., you knew I was looking for shorts, not longs. Remember when I said many people have tried to bet against me in their careers, and many people have gotten destroyed because of it, right? Secondly, now fifthly or whatever, sixthly, I'm looking for shorts. So that should have told you right off the rip, like, maybe my long trade ain't the best trade, but sometimes I make wrong mistakes. Sometimes I lose trades too. And if today would have been that, if I would have lost today's trade, chances are your trade would have won. But there's a few things there that I think I can help you with. We want to pay attention to 4 main data points every single day: the daily high, low, open, and close. And we want to see the previous 3 days. We want to see the direction the market is trending for the previous 3 days, because it just gives us a good idea of where order flow is heading, right? Where order flow is heading. Friday was uber bullish for the dollar also. So, I mean, just because of that, like, you definitely got to be careful looking for long Bitcoin trades when the dollar's moving up and moving up rapidly. Because remember, I say a lot, how fast it gets there matters. Ultimately, I expect Bitcoin to be a buy, but I would much rather you buy where? Daily support. I would have much rather you took that long here than above the weekly open. I would have rather you taken that trade there because A, it's daily support, and B, coming into Tuesday's trade, we're looking for the high or low to potentially either be put in or already be in. So if you get a bounce at daily support, which you did, you get long there, there is a chance that you just caught the low of the week for a long expansion range on the whole week versus trying to get long above the weekly open. Because even though it's green above the weekly open, that does not mean that that's going to continue to happen. And it still might, right? It still might. We got to see how today closes. If today closes above the weekly open, then you will have one candle that's showing potential for a new regime change or a new order flow direction to up. But if today closes under the weekly open or even bearish on the day, which it would have to get all the way down here in order to close bearish on the day, then you're going to know probably with at least 60% certainty that the weekly high is in. And you're probably going to be looking for downside continuation for the weekly expansion lower. So we are still looking for Bitcoin longs. And I promise you, when I have the edge, when I see it, I will let you all know in the Discord. I will. I promise. But yeah, I wouldn't have taken that entry. We were looking for downside continuation based off of the last couple of days of order flow. The first move in the day is usually the false move. So, I mean, it still could find intraday support, but our trade was watching the operating range high for short entries. And we always take profits before the support. So, like, this is the day's open. So, this is the low of day. But I can't expect price to trade all the way back down to the low of day because I have a clear support here with a clear bullish reaction from it. So the high probable setup or the operating range is there, here to here. And since you closed bearish the last 2 days, you're typically wanting to look for the short entry targeting support, but your profit taking will happen before the support because a lot of times price won't even touch the support. On the first attempt, it'll get what we call in the business front ran. And front ran just means that professional traders like myself, our entries and exits will be in and around these levels and oftentimes on the inside of them. So, like, you see how this wick didn't quite go to resistance? This is considered a front ran wick. See how this wick didn't make it to support? This is considered a front ran wick. In other words, people like me, short here, are taking profits on the move lower. So on the first attempt to get back down to the lower edge of the operating range, it won't even make it because the order flow runs out before the level actually even gets tagged. Because too many times in my career have I had my limit to get out of a trade exactly at the price for the front ran orders to screw me, and then watch price like get within $2 to $5 of taking me out of the trade and completely reversing and taking me out. Boom. Knocking me out. So we take profits before the support. But you're probably doing better. And if you're not doing better by this time next you will be. By next year, sorry. Give me a year of your time. You will be a better price action analyst than 99% of every single person on Twitter. I guarantee you that. When you see the market through my eyes, you will be so far beyond them people. Hopefully you understand what I'm saying. It was a good try, but just a little bit. There's just too many things going against that entry. Too many things going against it. So apologies for that. What KK was saying is that Bitcoin and dollar went up together. Yeah, I understand that, Victor. I understand that now. And yeah, I understand that can happen. If you want to learn this strategy, watch previous videos or join us in the community. Check the Patreon link for more info. Best place in the... If you're trying to learn how to do this, right? Yeah. Yeah, if you're going to come into the Discord and want to continue to do things your way, then I wouldn't even spend the money. Because most of what you've learned from other YouTubers and Twitter people is just wrong. It's just flat out wrong. It's not how the market works and ever has. But you still have to be skeptical of everybody, including me. For the 59 of you that are still here, I want you to put this in your head. 78% of the people of the traders and investors that you are subscribed to on YouTube are failing traders. 78% of the Twitter following or followers, crypto investing, stocks, Forex, it don't matter. If you're following them because of their advice for trading or investing, 79% of those people statistically cannot make money in the markets. It's a statistic that goes through all of retail. Now, if you follow actual hedge fund managers, that is different. But I'm talking about retail. 79% of retail fails at trading. So 79% retail YouTuber traders fail, and 79% retail Twitter people fail at trading. That is a statistic. It is a legit one. Be very careful about who you're following and taking advice from. And don't ever take a setup that they just throw out there, because the sun shines on a dog's ass every now and then. And a broken clock is right twice a day, if you get what I'm saying. But thank you for the plug, Ray. I appreciate it. Smash the likes. Yeah, always appreciate that. Sitting back and enjoying it all. Awesome. Could you have a look at CHZ? It has reached 2 daily resistances you had pointed out in previous streams. Yeah, the resistances don't always hold. I understand that. But yeah, we can definitely go look at it. I don't know what it's done because I haven't been looking at it. So let's go see. It's having a fantastic day today. Yeah, it's breaking out. I mean, occasionally you'll have that. There's multiple resistance levels there it busted out through. Just because it is an objective resistance, it doesn't mean it's going to hold. You've also heard that many times. It's just having a great, big, strong day today. There's nothing more I can say about it. A short squeeze is happening on this thing. On a day where Bitcoin is a little bit green. Price is chaotic. Very chaotic. But, I mean, given this and this, you had to have more of a bullish bias than a bearish one. I also say that, don't I? right? Don't I also say that? Don't I also say, as long as you're above the daily 21 exponential moving averages, you probably would rather be buying off support than trying to sell resistance. I think you've heard me say that a couple times too. Yeah, it's breaking out. Breaking out. There's nothing you can do with it now. You definitely don't want to short it now. And you definitely don't want to buy it now. It didn't give you an opportunity, really. Because this day here didn't pull back to a support. In fact, it broke down below all other supports. This really didn't give you an entry unless you are a trend line trader. Well, no, it didn't give you an entry there either. I mean, here it gave you an entry if you're a trend line trader. At the very least, you could have potentially bought this support and just seen what happened. But I would not have had you selling either one of these resistance levels. If you'd have brought this to my attention any day before today, I would have told you that more than likely you're looking for bullish entries based off of the 21 and 50. With Bitcoin and being patient, what will you look for in an entry? Daily support. What's your process for looking for entries? I try to find a directional trend bias, and then I look for entries at support, objective supports. I would also rather the 21 be pointing up and price be close to it and price to be above the 50 on the daily time frame RSI. Those are entry criteria, and you're only looking for up, and you will still get stopped out sometimes doing it that way. There is no 100% effective strategy in the world. Getting a jetpack hotspot for internet on the boat, ready to smoke some traders tomorrow. Verizon delivers jetpack. Nice. Good luck on that, Cassidy. Amazon, please. Correction or reversal? I think it's just a correction. But that is my opinion. We will know more once the dollar shows us its hand. You got potential support at 96.32. I don't know what that level is. It's old. You got potential support at 93.68. As long as you're above this yellow line, my friend, I like it higher. But it would be nice if it closes above this price today. So if it closes above $100.55 today, I would probably wait a day or two for a retest of that, and then that's where I would look for bullish entries if it was me. My demo trade didn't fill at the 23009 on Bitget, so we'll close the order. Yeah, Bitget's prices aren't exactly the same as Coinbase's. My entry on that short, Michelle, was 23,009. Oh, sorry, 23012, but I took it earlier. if you had a limit order setting at $23,000 even, and that 5-minute wick at 9:50 a.m. did not trigger you into the trade, then I don't know what's up with that. You should have got filled. You should have gotten filled. Look at Bitcoin now. Our profit target was there. Why? Well, it's intraday support. Look at the reaction you're getting off of that. So not only did we close our positions here for a nice healthy profit, other people started to get long there for a nice healthy profit. Why did they do that? If I had to guess, probably because this is happening right now. That is a fantastic intraday bearish reversal pattern. And you are still in a downtrend. So, yeah. As long as this thing is closing dailies under 103,663, guys, I still will be looking for bullish entries on Bitcoin. So now the price to watch intraday for Bitcoin for potential entries. Now, this does not mean you're going to make money. Would probably be there. Or just do it here. Watch 22,905. And just like that, the short that we took is done. See? Operating range. High probable areas. You don't get any more high probable than that. You just watched me take a profitable short to the downside, and then you just watched other people take a profitable long to the upside in the same exact range. Come on, man. You ain't gonna find no one better on YouTube. No one. I'm talking to anybody and everybody who wants to learn how to do this. Thank you. Yes, I noticed many times 10,000 Bitcoin appears on a limit buy, 10K price on Binance and seems to pull price down, then they remove it. Spoof? Yes. Psychological ranges? Yes. Markets might be the strangest sounding way to hear how it operates, and yet makes more sense in how the world turns than any other occupation. Yep. Gotta go. Thanks for the rant. Later, Fute Ledges. Later, you Fute Ledge. May I ask your thoughts on Heiken Ashy candles for a price action trader using candlesticks? I don't use them. I have never used them. So I can't give you any thoughts on them, unfortunately. I don't know how they work. I don't know what their purpose is. I don't know who invented them. I don't know when they were invented. I literally know nothing about them. Unfortunately, you will have to Google some other person's YouTube video on a Heiken Ashy. I don't know anything about it. Sorry. Congrats to everyone who traded with us. Thanks, Heath. You are welcome. Yeah, congrats. If you guys took that trade and you made money, congrats. The congrats are in order. We had a plan. We executed the plan flawlessly, and the plan worked out flawlessly to actual perfection. You will not find anybody else on the whole YouTubes that does it better than me. I guarantee it. What is your opinion about silver? Well, it probably got killed the last few days. And it did. Only because it's trading against the dollar. If the dollar reverses, silver will probably find support. I say probably because I don't know for sure that it will. But as long as you're trading above that price, you have to have more of a bullish bias than a bearish one. Now that you are trading under the 21 exponential, your near-term traders, day traders, will be bearish silver. They will call this a reversal. You do have a weekly engulfing bearish candle, but your trend is up on the week, on the year, and on the month. Well, it's not up on the week, but on the month. Well, not on the month either now. On the quarter and on the year, you're still up. You're still up. Longer term, I like to trade with the direction of the trend. On the weekly, the 21 is clearly pointed which direction? Up. I would call this a pullback. It's a vicious one, but until you're closing weeklies under the 21 and under this yellow line, I think silver finds support. Only time will tell if it does. It's too early to say if this is a rejection or not, Brian. It is too early to say it. It looks like it might today, but like I said, this could take a week or two before you actually get the rejection. So we still have time. On what time zone should I set my trading view to correspond with your daily open and close? The daily open for me is at 1900 hours Eastern Standard Time. On Bitcoin, on FX, it is 1700. You don't have to set your trading view to my time zone in order to get my open and closes. You just need to simply watch when you get a new daily. What time does that occur? No matter where you are in the world, no matter what time it is in the world, the price should be the same. When Bitcoin closes its daily candle, it opens a new one. That price should be the same across all time zones. The time that it occurs will not be the same, but the price should be the same. But I'm on the Eastern Standard Time, New York City, UTC-5. Yeah. I don't own a prop firm. I do not have a prop firm, old rope. We already took the Bitcoin trade. We took it at the open of the New York session, or at the New York stock market open, and we're already out of it. We already took profits. We already moved our stops, And for me, I'm already stopped out. So we already made money on that trade. That trade is over and done with. So as far as day trades goes, I'm done for the day. Peter just says that's gold. Oh, sorry. You're right. It is gold. XAGUSD. But I mean, really, how much difference is there? it trades against the dollar. The dollar had a massive move up, so it got killed. It printed a bearish engulfing, closed above the weekly 21. That's nice. Currently, you have traded under and are now back above. Naturally, you must wait on the weekly close to make sure that it closes above. But if it does close above again this week, then next week I would be watching for potential bullish entries on retests of 22 spot 35. Will you make money? I have no clue, but that's what I would do. Nice Nick, bro. Okay, I don't know what that means, but all right, guys, we're going to wrap it up there. Thank you guys, as always, for your time. We will be live again Thursday morning. Oh, got you. The Discord is the hedge fund tier. It's the hedge fund tier. The prop firm tier gives you a live stream every Sunday. It's for the channel members at the $5 level. I do a live stream every Sunday at 11 o'clock. Unless something comes up, but most of the time we're pretty good about getting those out. And it's a live stream that we go over whatever the channel members and Patreons want to go over. Usually I give my outlook for the entire week on those streams, what I'm looking for to happen and stuff like that. I think they're good. A lot of times we call the moves out pretty damn close to what happens throughout the week before it happens on those streams. So every Sunday at 11. Every Sunday at 11. That's what the prop firm does on both the YouTube channel members and Patreon. And in the hedge fund tier on Patreon, it's the next tier up. It is more money. It's the tier that gives you access to the Discord. But if you go on Patreon, if you use the link in the description, go to Patreon, read the definitions or the explanations that I have set up for each firm. It goes over in depth of what is included, I guess, if you will. Didn't really set it up to do anything or to start an internet business or anything like that. We did it purely out of donations because you're not going to find better information than what you're going to learn here. It simplifies your analysis and it makes you a much sleeker investor. It gets you in places, like I said, the margins are right, like almost perfect sometimes. Not always. We eat stops too, just like every other trader and every other investor, but we have a high hit rate. So thank you guys so much for being here. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.